Good afternoon, everyone, and welcome to the Monday Open, hosted by the Vantage private client team. My name is Ollie, and today I'm joined by a new face to the Vantage YouTube channel. Today I'm joined by Steve, who is a new relationship manager joining the Vantage private client team. Steve, welcome into the Monday Open. Why don't you introduce yourself and tell us a little bit about yourself as well?
Good afternoon, everyone, and thank you for the warm introduction, Ollie. I'm really excited to be here today and looking forward to obviously connecting with our traders after this session. As Ollie mentioned, I've recently started with Vantage, but I've been in the financial services industry for 20 years now. Since 2016, I'm also an experienced trader in specializing in AUD, USD, gold, crypto from a fundamental and technical perspective. Over the years, I've had the opportunity to mentor international traders and work on CFD projects across the globe. So, really looking forward to adding value to your trading journey.
Unreal, and we're very thankful to have you on the call here,
Thank
Steve.
you.
So, move into the agenda for today. So, we'll start off looking at the events of last week, or the key events of last week, that is. Having a look, putting a microscope on the key events, and then analyzing how do prices react as a result. We'll then put a focus on the week ahead, where we'll look at some of the major upcoming events for the week and give it a bit of a take on where we're speculating prices to go as a result. We'll then move into the technical corner, where we'll look at a couple of different markets through a top-down analysis, basically identifying trading opportunities using our technical indicators. And lastly, we'll go into the Q&A section, where we'll be answering some of your guys' most commonly asked questions from the week previous. All right, so shift into last week. We did want to start off by putting a spotlight on your guys' most commonly traded products from the week prior. Obviously, the price reaction to all of these through the week has been mixed. So we'll put a bit of a spotlight next onto the key events and what's been driving the prices behind these. So, Stephen, did you want to take it away with last week?
Yeah, thank you, Ollie. I mean, last week was all about the sort of deadlines, especially the trade deal deadline. So there's the 9th of July is the deadline that the US has specified. We had the talks with Canada. So Canada actually pulled back on its digital tax, which was basically targeting US tech companies hours before it was to take into effect. So this would have actually seen tech giants such as Amazon, Google, Meta, Apple hit with about 3% tax when providing services to Canada. So, because this didn't go ahead, it's really reopened the negotiations with the US and also ease some of that trade tensions. We also saw that in Vietnam, so Vietnam as well as the US, they also were able to make a deal. And notably 1 week before the actual 9th of July deadline, which gave a sort of positive sentiment to the market. In addition, there was also the US House passing the bill that's labeled the Big Beautiful Bill. Another reason for markets to take what's called a risk-on approach. What actually happened was that we saw the global indices push higher. So, for example, the Dow 30, Nasdaq, the S&P 500, as well as risk currencies such as the Aussie Canadian dollar strengthened due to the improved trade tone and sentiment. Even crypto rallied on the back of the increased risk appetite. And yeah, we also got a look on a lot of the global economic factors. So, for example, we saw China's PMIs. It was a surprise to the upside, which also gave the Aussie dollar an early week boost, as the Aussie is really aligned with all the China being the biggest sort of trade partner. However, momentum kind of faded during the week for the Aussie because of the soft retail sales that came out, which has led to probably an increase with the rate expectations this week by the RBA. And over in the euro, we did actually have the ECB forum, but I'll hand over to yourself, Ollie, for the insights on the ECB forum.
Well, for the ECB forum, I mean, long story short, the price reaction to the forum was pretty little to none, if that. But I do think where the significance comes in for that was just that we did have the central bank heads for a number of the major economies in the world speaking. So To break it down, we had comments from the ECB President Lagarde, who basically confirmed that the Eurozone has achieved its 2% inflation target. We had the Bank of England Governor Bailey and Bank of Japan Governor Ueda, who did highlight inflationary pressures and the need for patience around future rate moves. But then, however, we did have the Fed Chair Powell. Also, didn't really give much of a clear indication on when the Fed will be cutting their rates. And he did cite uncertainty on inflation and the impact of the tariffs. But this was quite early into the week last week, obviously giving very little indication of future rate moves. But I do think we did get a bit of clarity on potentially what they are thinking through the US employment data, which came out later in the week. So, Steve, did you want to go over what happened in that?
Yeah, definitely. With the US dollar, the US dollar actually hit a major milestone last week. So it's the lowest level this year, more down by more than 10% for the first half of 2025, which is the worst first half performance since 1973. So that's saying quite a bit about how the US dollar is going. But that was towards the beginning and the middle of the week. But then towards the end, just before the Independence public holiday, we actually saw the strong non-farm payrolls print as well as a drop in unemployment. So unemployment was expected to be 4.3, but we saw 4.1, which was obviously much better than anticipated, which obviously helped the dollar recover heading into the weekend. Obviously, with the public holiday, it does mean that a lot of the train could be trickling in this week. But there was obviously the positivity around the employment, which is also showing now with reports that there could be the actual US Fed might actually be looking at a later sort of cut. So, from all reports from reading articles, would probably be about September at this stage. But yeah, it is one of those things that's prevailing with a lot of the data. And we were able to also see with gold, for example, gold was able to have a bit of a during the course of the week. It was rallying, but there was a quite a bit of a sell-off as soon as the non-pay payrolls came out. So it witnessed quite a bit of a whiplash, and yeah, it's recovering at the moment. We also saw the Sunday OPEC. So there was a confirm in the hike in oil production levels. So basically increasing the output by 548,000 barrels of oil per day in August compared to the current 411,000 expected for each month. So that sort of increase we saw basically a 1% drop when it comes to oil prices this morning. Um, but yeah, that's basically the latest for last week. I might hand over to you,
So,
Ollie.
did just want to touch on that one for the OPEC meeting as well around the oil prices. I did see some late comments this morning from the the Canadian PM Carney. Did basically allude to the fact that they are looking to put in a new oil pipeline, which I'm imagining will put upward pressure, adding to the already going upward pressure on oil supply, which in turn will add to downward pressure on the oil prices going ahead. As for the exact timeline on that, I don't think he gave too much of a clarity, but I would expect to see the supply levels really weigh on the oil prices. I think that covers us for last week. Steve, did you want to go into the events for the week ahead?
Yeah, definitely. So this the week ahead is really looking at a lot of the announcements around the tariffs. So obviously the deadline is the 9th of July. Trump on Friday actually sent 12 letters to 12 countries. He didn't specify which countries. So they've got till the 9th of July to come up with a deal. With those sort of tariffs deadlines, basically they're going to be enforced as of the 1st of August. So the the actual monetary will come into effect then. So we should see a lot of volatility, probably within gold, especially how with all sort of the sort of talks about the tariffs and so forth. The other thing would be the major around the AUD USD, for example, or the Aussie, would be the RBA cash rate. So currently at the moment, we're looking at, based on the forecast, so based on the big four banks, all four big four banks are expecting a cut of 25 basis points tomorrow at 2:30. So it's currently at about 97%. There has been another sort of report that UBS was originally thinking that was going to be August, but they've changed their mind to say that's July based on the poor retail sales and building numbers that were released last week. While we've also got Bank of America who are actually going against the grain and actually saying that there isn't going to be any cut tomorrow. So it's interesting times. We'll see. It's really at the moment the AED USD is already factored in, so it's factored in that sort of cut. But it'll be interesting to see what the RBA says post that sort of meeting and the reasoning behind that. Um, is there anything else that you wanted to also add on, Ollie? Maybe just in regards to any of the other sort of data points.
Well, I think for the RBA cash rate, I did just want to touch on that. So last time they did cut rates consecutively at meetings was actually when COVID first started to hit back in 2020. So I guess if that tells you anything about the economic landscape that we're in, it's dire straits looking for it. Yeah, in terms of the RBA, I guess that's where we're coming through. For the RBNZ, they're expecting the rates to be held at 3.25. But one thing for the RBNZ, I think we've said it on the video before, is that they are very good at signaling their intentions prior to it happening. So I'm not expecting a huge amount of movement on the New Zealand dollar after that announcement is made, just because it seems like the traders already priced it in largely. But yeah, Steve, did you want to take it away with with China?
Yeah, yeah, with China, obviously the consumer price index will be fairly key to see the positioning and see how that impacts the Aussie as well. Anything to do with China, we look closely at that sort of data to give us an indication as to the sort of trade um, exports and so forth, and how that's going to affect our economy essentially. The UK GDP, that's going to look at the euro as well as Great Britain pound. So we'll see with how that actually translates to the ECB comments from Lagarde to see, whether they've met their sort of targets. And the last thing which is going to play a really big key is probably the US unemployment claims. So touching on the last week's the non-farm payrolls, the U.S. unemployment claims is really going to solidify and give that sort of direction around those projected U.S. Fed cuts. So right now probably the next one is looking at probability of September, but with this sort of data that's coming in, that could obviously solidify it or even change it. So it's more wait and see.
All
And
right.
Ollie, yeah.
Yep, too easy to say. Well, I think that brings us probably to the end of the this week's section. So we'll shift it now into the technical corner. Let me just share my screen with the audience just here. All right, too easy. So to start off, we're going to be looking at the Australian dollar against the US dollar. So I'm looking at it from the weekly to start off. So I've highlighted in here, just in the blue box just up here, it looks like an upward trending market, especially in the short term since April this year. Obviously, we did have a big spike and, a big drop and a big rally back when the tariffs were announced and paused subsequently. But I'm focusing on this upward trending market just here. The upward momentum or the buy momentum right now, I think, is being underscored or reaffirmed by the MACD indicator as well as the RSI, where their respective lines are above their respective signals. So I'll bring this into the daily chart just here where you can get a bit of a picture on the price action of what's going on at the moment. So we can see as it's open today, we can see that it has dropped down towards its 50-day moving average, although I am largely accounting that to the RBA decision coming up tomorrow, as Steve just mentioned. However, I did want to highlight the significance of the 50-day moving average passing over its 100-day and 200-day moving average, currently on track to close towards a 400 day, which would underscore the bullish momentum in the short term. However, if we are looking at the RSI and the MACD, it is slightly angling towards towards a sell momentum. So we could see a short retrace to find support before carrying on the upward momentum. So for me, if I'm looking into the 4 hourly chart just here, we can see as of, well, essentially about 45 minutes ago, the time of recording this, it has found support, is currently on the trend up. However, I'm looking for a confirmation of this support to give me a clear indication for a buy. So obviously, as a buyer, looking on right now at a short-term sell momentum, I'm looking to buy the dips, which I think at this current moment around now, I'm looking for a further confirmation of this. As well, I'm going to be looking for my indicators sorry, to expand as well. So if we move into the next one here as well. So if we're looking on the US dollar against Canadian dollar, I'll shift it back to the weekly here. Sorry, one sec. Okay, so looking on the weekly here, if we're dating back to around mid 2021, we are seeing an upward trending market as highlighted by the blue lines on top and bottom just here. However, I did want to highlight starting from around late September 2022, I'm seeing a range bound market dating back from there. Obviously, around here in October 24, it did break above to find resistance, had since traded back into this range here. So if we move this onto the daily just here, give a bit of an indication of what I'll be searching for here. So as I mentioned, you can see it did break above the upper range and has traded back into it. And I think the downward momentum, I'm going to be looking to carry on this downward momentum for a sell position. I think this is also underscored by the momentum having the 50-day moving average cross over all of its other moving averages, being the 100, 200, and 400 day. So I do think that momentum is still very much in play. On the RSI indicator, currently it is indicating for an upward trajectory, but I'm still looking to sell. So for where the price action is now, I'm thinking probably like look for an upward trend around here to find a resistance level, but I'm looking for confirmation of this being a resistance level to see whether it carries through or not, which will give me a signal of its momentum strength. Given I would say that this is quite a risky trade at the moment, given that I will be trading against the short-term momentum, I'll be looking to manage my risk by having a relatively close stop once I do enter the entry, in case it does go against my favor on that one. Okay, so I think that brings me to the end of the technical section here. So we'll move in now to the Q&A section. So the Q&A section, for anyone who has watched before or who hasn't, in this section we do answer some of the most commonly asked questions from the week prior. For anyone who is looking to get involved with the Q&A section or ask any questions for us to cover, please feel free to reach out in the VIP chat room or to Stephen or to Steve or I directly. So Steve, did you want to take it away with question one?
Yep. So first question is, what are risk on, risk off themes? Which is a great question. So thank you to whoever's asked that question. Basically, risk on refers to a period where investors are more optimistic about the global markets. As well as the stock markets, for example. During these sort of times, traders are prepared to have a bit more risk tolerance, and in pursuit for greater sort of returns. So they'll be looking at different sort of asset classes, similar to, for example, the AED, so Aussie, um, the the New Zealand dollar, as well as the Canadian dollar, so CAD, and also even crypto. So during these sort of markets, it's confidence that everything's stable within the world. For example, there's no sort of geopoliticals that are going on, etc. The risk of occurs when investors are more cautious and they want to basically look at protecting their cash, and the sort of assets that they're actually looking at are really those safe havens. So safe havens includes things like government bonds, the US dollar, Japanese yen, Swiss franc, as well as gold. So during these sort of uncertainty times, whether there's market volatility, that's where you'll probably look at that sort of risk-off appeal. And I'll hand
Fantastic.
it to you.
Great.
Yep.
Thank you, Steve. So I'll take it away with question 2. So what is the RSI indicator and how would I rate it? Obviously, for the technical section that I've done today and all previous, I do reference the RSI indicator a fair bit. So what is the RSI indicator and how do I rate it? Well, the relative strength index is a momentum indicator used by technical traders to evaluate the speed and size of price movements and to indicate overbought or oversold markets. So I've got the screen grab on the chart just here, looking at the British pound against the Swiss franc on the weekly. So the RSI compares average gains to average losses over a specific period, typically being 14 days. So an RSI above 70 will indicate that an asset's price has increased too quickly and is potentially due for a downward correction, as shown by the 2 circles on the left of the chart just there. Whereas an RSI below 30 suggests an asset price has decreased too quickly and may be due for an upward bounce, known as the 2 right circles on the side just there. However, I do just want to note, I do just want to preface, however, so that the RSI, as well as other technical indicators, are here to assist you in forming your trade ideas and strategies. So you would want to use the RSI alongside other indicators to develop a cluster of signals to strengthen your trade ideas. Okay, so that brings us to the end of the Monday Open today. Recording of this one will be uploaded on YouTube after the session, as well as uploaded into our VIP chat room. For anyone who hasn't been to the VIP chat room just yet, I would highly recommend it. Steve and I are both in there all day, every day, along with a number of analysts from the Everest Fortune Group. If you're looking to ask us any questions or just get engaged with any of the content, please feel free to do so. Steve, I want to thank you again for being here with us today, and I'll
Thank you,
catch you
Ollie.
later.
Thank you, guys.
Cheers.
Enjoy your day.